BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
The rotation trade is on. Gold, silver. I'm smiling because I am not a gold bug. I don't own a single bit of gold. I was trying to buy gold 3 or 4 months ago. My mother wanted to buy some Bitcoin. I said, I will buy you Bitcoin if you buy me some gold, because I wasn't even sure where to get gold. And I think she went into her jeweler and they were like, we don't sell gold here. And they gave her a card of somewhere else, and there was no gold bought. And so I watched the meteoric rise of metals from the sidelines. I watched gold, I watched silver, I watched palladium, I watched copper go on generational tears. And over the last 36 hours, we have platinum, palladium, gold, and silver. Silver's down over 30%. This is something that normally changes less than 1% a day. Silver's down 30%. $1 trillion of market cap wiped out in the last 36 hours. Gold is down 13.6%, dropping under $5,000 an ounce, under $4,900 an ounce at this point. Platinum and palladium plunge over 20% each. Why today? Well, new Fed chair, Kevin Warsh. Congrats to the new Fed chair, Kevin Warsh. I'd say he deserves a party. He's pro Bitcoin. We're going to be talking more about Kevin Warsh, getting into a little bit more about his background story. And we've got a pretty tight show for you guys today. We're going to be talking about Kevin Warsh. We're going to get into who he is, what he believes in, and of course, what his take is on Bitcoin and crypto. Obviously there was others in the running, Kevin Hassett, Rick Ryder. They said Kevin Hassett was even more pro crypto than Kevin Warsh. So this is kind of middle of the road when it comes to, where the new Fed chair will stand on crypto, but he is supportive. And then, the rotation trade. They're saying now this was the metals bubble down 30%. It just seems like, look, maybe this is a dip. Maybe you should be buying here. I don't know. I've been staying out of the gold trade up, since its rise. But I mean, the buyers of gold especially are in price insensitive. And look, we are on this decade-long. It's what I saw a clip from Peter Thiel on Rogan the other day. It's like we're on this decade-long stint away from the world of bits and more in the world of atoms. This is, repatriating a lot of industry. We're rare earths are important. All these things are important. I'm just sticking to what I know best, and that's the coins. So I will be patiently DOS collar averaging into the coins for the foreseeable future, and primarily, most likely, be staying away from the metals as well. Neo Finance, we'll play around in equities a little bit. I want to talk about Kevin Hassett. We're going to be, let's pull up President Trump's tweet here. Let's get it up. Because this is going to give us probably one of the better senses of who Kevin Warsh is, the new chair of the Federal Reserve. So Trump is pleased to announce that I'll just read this. Donald Trump says, "I am pleased to announce that I am nominating Kevin Warsh to be the chairman of the Board of Governors of the Federal Reserve System. Kevin currently serves as the Shepard Family Distinguished Visiting Fellow in Economics at the Hoover Institution and lecturer at the Stanford Graduate School of Business. He's a partner of Stanley Druckenmiller at the Dukins Family Office, LLC." Quick little side note here is that I believe Stanley Druckenmiller and Treasury Secretary Bessent were buddies and helped take down the pound, and was part of that generational trade that they did. So I believe Bessent may have weighed in on this decision for the Federal Reserve. Kevin received his AB from Stanford University and JD from Harvard Law School. He has conducted extensive research into the field of economics and finance. Kevin issued an independent report to the Bank of England proposing reforms in the conduct of monetary policy in the United Kingdom. Parliament adopted the report's recommendations. Kevin Warsh became the youngest Fed governor ever at 35 and served as a member of the Board of Governors of the Federal Reserve System from 2006 until 2011 as the Federal Reserve's representative to the Group of 20, the G20, and as the board's emissary to the emerging and advanced economies in Asia. In addition, he was administrative governor, managing and overseeing the board's operations, personnel, and financial performance. Prior to his appointment to the board from 2002 until 2006, Kevin served as special assistant to the president for economic policy. 2002 to 2006, that was it? No, that was George Bush. George Bush was president 2001, 2002, until 2006. Kevin served as special assistant to the president for economic policy and executive secretary of the White House National Economic Council. Previously, Kevin was a member of the Merger and Acquisitions Department at Morgan Stanley in New York, serving as vice president and executive director. I've known Kevin for a long period of time and have no doubt that he will go down as one of the great Fed chairmen, maybe the best. On top of everything else, he is central casting, and he will never let you down. Congratulations, Kevin. President Donald J. Trump. That central casting is the thing that got everyone's attention. Central casting for this job means he's right out of Trump's cast of characters. Trump was obviously going at Powell for not cutting rates quick enough. They want someone that is going to, you want the Fed to be independent, but aligned with the White House and the Treasury's agenda. And so the thesis here is that this is someone, he's not coming directly from the administration like Hassett, but he is going to play along, right? Because he's right out of central casting. So let's bring up our next headline here, which is still on this vein. We're going to show you guys a video about Kevin Warsh. It's from an interview that he did, and he talks about crypto and Bitcoin a little bit. Let's bring it up when it's ready, and we can go ahead. We can watch it. You guys should be able to hear this as well.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it? Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or could provide market discipline. or it could tell the world that things need to be fixed.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous. I can hearken back to a dinner I had here in 2011 with someone who is another guest on your show. I won't say his name. Okay, I just did Mark Andreessen, who showed me the white paper. That was the original white paper. I wish I had understood as clearly as he did how transformative Bitcoin and this new technology would be. Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they're doing things right and wrong. It is not a substitute to the dollar. I think it can often be a very good policeman for policy. And if I were to speak more broadly to what did Charlie Munger and others perhaps have in mind, there is a proliferation of securities that go under all sorts of names. Many, if not most of them, are not worth what they might be being traded for. So what did Charlie say, and maybe his pal Warren say? There's the innovators, the imitators, and the incompetents. They're real innovators that are happening in and around that new technology. And what I would try to impart towards businesses and bankers is that the underlying technology that Mark showed me in that white paper, or tried to show me in that white paper, it's just software. It's just the newest, coolest software that will provide us an ability to do things that we could never have done before. Can the software be used for good and evil? Yes, both, like all software. Right. So I don't cast aspersions like that. If there's a final point, it's these technologies are being built here. I don't just mean on Stanford campus. I believe in the United States. And the world's most talented engineers from China and Europe and everywhere, they come to the United States even now to try to build this stuff. And my view is by building it here, that gives us an opportunity to be more productive and create something very special over the next decade.
Okay. So this is a very measured approach. I think, he makes a lot of great points here. I'm glad that he's not, one of these guys that is afraid of things that he doesn't understand. I think he recognizes that guys like Mark Andreessen and, the crypto native technologists out there understand it a little bit better. But as it pertains to economic policy, it almost sounds like he sees Bitcoin as a measuring stick for whether or not the Fed is doing a good job. Obviously, the Fed is controlling the Fed funds rate, but it's also very, very instrumental in global liquidity, right? As the dollar is the reserve currency, and you can kind of increase or decrease the amount of liquidity in the system, supply and demand, whether, the Fed is in charge of keeping inflation low. And so if inflation is too high, maybe they will, that's because there's too much liquidity in the system. They need to take some out. In the vein that Kevin Warsh is describing, we're going to have too much liquidity in the system. That's going to make its way into Bitcoin. We would take some out, and you can almost create a very predictable path for global liquidity. And I'd imagine that creates a much more sustainable growth path for Bitcoin. My 2 cents. Let's keep going. I think we've got one last thing that we want to show you on Kevin Warsh. So we can pull that up. And this is a word from Avishal, who is, let's go ahead and cut to it. This is a word from Avishal, who was on the show just recently for Near Intense Day, and is the lead at Electric Capital, the fund that he runs. And Avishal says that Warsh is excellent pick for Treasury. Pro crypto pick for Treasury. I think he means the Fed chair. He's been one of our most helpful hands-on advisors at Electric Capital. Didn't realize that Kevin Warsh was a advisor to a crypto VC. That's pretty important there. He's an investor in crypto, fintech, and AI companies. He gets macro from his time at the Fed. Few people as qualified as Kevin for the job. Look, he's invested in the space. Usually people, tend to play to their incentives. President-elect Donald Trump's transition team is considering pairing Kevin Warsh, former Federal Reserve official, in the Treasury Secretary role with hedge fund manager Scott Bessent as director of the White House's National Economic Council. Yeah, so this is back when I guess they were considering Warsh for treasury, but obviously, Warsh now is primed and ready to be the next Fed chair. Let's go on. Our first guest is getting ready behind the scenes, and so we're gonna bring him up in just a moment. Let's get him in the back room, get him ready to go. Kevin Warsh is the new Fed chair, so yeah, we can go ahead. Let's keep moving. Preview looks good. Let's go ahead and cut, and we'll talk about where where things are headed. So obviously, Kevin Warsh in his Fed chair. I think Flood may have said it best. "Quote unquote," they're going to slam rates to 1%, and Bitcoin is going to double to 160K plus. It's obvious. And also for a bonus, he's the new U.S. Federal Reserve Chair, Kevin Warsh, talking about Bitcoin. And that's the video that you guys just saw. So pretty interesting as far as how Kevin Warsh sees Bitcoin. He's invested in the space. Seems like it's probably a more pro-crypto stance as chairman of the Fed. But again, this guy, he controls, federal funds rate, monetary policy, a little bit of regulation as well. It doesn't have a direct impact on Bitcoin. Obviously, he, as Federal Reserve Chair, he's going to have an impact on global liquidity. And, we're going to see how that affects Bitcoin going forward. I think in a more sustainable growth path. Okay, we've got our first guest. He's ready in the back room. We're going to bring him up now. This is Vikram on building on-chain stable coin neobanks. Vikram, welcome to the show, man.
Excited.
Absolutely. It's a pleasure to have you. We've been pretty fired up and excited about this neobank, neo-finance thesis. And so stable coins are at the center of this. Tokenization, RWAs are at the center of this. And so I'm curious to get a little bit more perspective on Superform. I think you guys are, firmly, squarely within this neobank thesis. And so, yeah, let's talk about it. Let's talk about what you guys have going on at Superform, and tell us a little bit about yourself.
Yeah, you guys have been exactly on it with the neo-finance thesis, and Superform's in the middle of it. So what we're building is the first user-owned neobank. And the thesis, I think, is pretty simple. It's that banks have failed us for a while. Yields right now are also low. Fintechs have failed us. You have, recent cases with Robinhood and Venmo and a lot of those where they've really just built the same legacy rails over the existing broken system. And then now you have DeFi protocols that actually have an emerging shot at embedding ownership into the stack and then making sure that those same problems can't happen to users. So at Superform's building, pretty much we have 3 layers of the stack. We have Superform Core, which is, think of it as just like recreating everything that the bank has done. And then we've built our own structured vault products on top of it. And then we've wrapped it all up into both a web and iOS app. And yeah, web's been live for 2 years now. And our iOS app's about to launch in the US and Canada next Tuesday. So
let's go, man. Exciting times. Was it difficult to get the mobile app through the App Store? Because for so long, we've heard and we've seen there's problems in revenue sharing. They want a cut of in-app sales and crypto, especially with NFT products. It was difficult to measure, where does that come from? What is a sale? What's not? Is it on chain? Is it on the app? Tell us about your experience getting this app through the App Store.
All types of problems, but I don't want to jinx it at this point because we got it through. But yeah, I think getting DeFi protocols generally, how do you regulate, how do you create a framework around them with their still licenses? And, it's tough for a lot of these Apple approvers to get there, to wrap their mind around it. But at the end of it, it's just open financial technology, right? And if protocols don't want a KYC and they don't need licenses to do it, I think that's just something regulators are going to have to figure out how that plays.
Yeah. And, they're sorting that on DC now. I don't envy those guys hashing that out. Okay. And so as a neobank, for so long, users have been forced to, treat DeFi as like a browser experience. I don't mean like on the web. I mean, they hop on their wallet, they have some, assets in their wallet, and then they're going out and connecting their wallet to different DeFi protocols. And, they're choosing between a bunch of, do I want to go to Morpho? Do I want to go to Aave? Do I want to go to Pendle? And then they're kind of sorting through the different options there. It's been very fragmented, not to mention on all of these different chains and, the bridging experience. The neobank experience is one that's a lot smoother. And we kind of, on the show, we've talked about this barbell, this kind of spectrum between simplicity and choice, right? Right now, the user experience is not simple, but we have like this abundance of choices. And people have even said there's so many choices, it's fragmented. How do you guys determine what yield products and what to expose to the end user when they open the app?
Yeah, it's one of the toughest problems we've had to solve on an app level. Is I think now there are over 1,500 vaults that have been listed on Superform.
1,500 vaults.
1,500 vaults.
And those are like, that's an aggregation of a bunch of different, from Pendle and Aave and all these different guys are all getting aggregated onto Superform.
Exactly. And you mentioned some of the UX stuff, right? Is like the biggest thing we were solving in the first 2 years of Superform being live was this entire search, discovery, and execution process. So we're on 10 different chains, but we allow deposits in any asset in any chain. So we, have like our own smart account infrastructure. We're bridging, we're swapping, we're depositing for the user. But the experience for a new user coming in still to evaluate all of those 1,500 opportunities, sure, we made it easier for them to find them, but cognitively, it's still really hard for me to understand as a new user what all those protocols that you just mentioned are. So we realized that there needed to be a middleware layer built on top of those vault products, which, funny enough, were our own vault products that were curated products that were actually accessing the underlying vault products themselves. And our Super Vault product line, we launched our V2 of that beginning of December. And pretty much what that is a combination of fixed and variable rates from Morpho and Pendle. And that is just the ideal basket really for a user coming into crypto. They might not want to hold PTs for, hold them to maturity for 3 months, but they'd be more than happy to hold a basket of them. And the vast majority of users are entirely liquid through that entire process. So I think there's going to continue to be, and you guys have seen this vault layer evolve, and now vaults are like, one of the hottest areas of DeFi. But I think at the end of it, the products that get distributed to users are going to be those aggregated vault products, and people are very rarely going to necessarily be interacting directly with a Morpho market,
especially with retail. I'd imagine they're and we also saw like the likes of Robinhood come in and they said, park your cash here with us and we'll give you 4.5%. And I'd imagine this is something that we all, I think, wanted for a long, long time, and it's slowly coming to fruition. I think vaults get us one step closer, which is high yield savings, right? Like, I go to Wells Fargo, I go, somewhere to one of these too big to fail banks, I get 0.25 basis point on my savings account. Like, we're headed in a direction where we can get some high yield, but we can also get it safely because it's delivered to us through the banking infrastructure. Like it's a UX and a portal experience that we're used to in terms of the traditional banks, but it delivers 5 to 7% yield, right? And I'm curious actually how you plan on integrating more of the what we call quality assets, because we've seen Bitcoin and ETH, and obviously those guys stand on their own, and then a entire network of stable coins that would get deployed into these DeFi products. But now institutions come in and they productize a lot of these things, and they're just saying, hey, here's my money market fund, it pays 5, 6, 7%, I can deliver this on chain. How are you thinking about integrating the Pendle PTs of the world with the Janice Henderson CLOs of the world?
Yeah. I mean, look, so we have 150,000 entirely retail users on our app. Their demand is mostly for high yield savings products without KYC, and they want fast DeFi type liquidity. The institutional investors certainly, would be looking for something. They'd be okay with KYCing. They'd be okay with an asynchronous redemption process. They'd be more interested in the Janices of the world. as we expand into the institutional category, I think it'd be very interesting to see where that demand comes in from, which is why we still have a web app. But yeah, for the time being, I mean, retail is all about high yield products, and increasingly they're looking to have some downside protection, and they want insurance. And I think something that's going to be big is like this whole like tranching of products, right? You're going to have an insured layer, uninsured layer. Aave kind of was leading the way with that, with the umbrella program. But for the most part, I think crypto natives continue to use the junior product, and then maybe some of these new users that we onboard through mobile to go for the senior. But that's kind of how I'm thinking about it. I'm not sure entirely right now where the demand is for a Janus product from retail. Right?
Yeah. And that's, I think that's right. I think right now, the neobank game is a distribution one. Like we put out this market map of neo finance, and I think you guys, unfortunately, were one of the snubbed. Like that was our mistake. You guys have been building and doing great things. I'll admit that we can't get everyone. And you guys certainly deserve to be on that. You earned it. And so with that being said, there's an entire industry of, this neo finance thesis, right? Is that legacy finance is being forced to innovate for a variety of different reasons. And DeFi for a long time wasn't able to find product market fit. They're being forced to innovate and adapt as well. Just so happens these are evolving to the same place. And that is creating this convergence of the Robinhoods and the Venmos and the PayPals they're kind of, correct me if I'm wrong here. I'm curious to get your take on this, actually. The Venmo, PayPal, like Revoluts are also going into the world where you guys are headed. It's this neobank world, right? Is that the right way to think about this? And in that world, from my perspective, distribution is king, because everyone can source yield from, whether it's the CLOs or it's the DeFi projects. We can all get around that yield, but it's all going to be about product experience, and distribution is really where this game is won. Is that how you think about this?
I do agree with you. But there's two things. I'll start with my more like philosophical crypto native answer to that, which would be that you can build something. You can't build something decentralized on top of something centralized, right? And the entry point from a lot of those fintechs is going to continue to, sure, it can wrap up DeFi in a nice way, easy to use, but it's still going to have the exact same issues that fintechs try to solve on top of building on top of the banking layer. That's my crypto answer, is you just have to build these things right from the first place. On the distribution side of it, though, and why I think crypto apps can actually beat your Revoluts and Robinhoods of the world is simple in a way. It's the best thing I think crypto has introduced, at least on the economic side, which is just tokens. Right? Robinhood's not rewarding people with tokens. Revolut does not rewarding people with tokens. But as a DeFi protocol, that's how we've bootstrapped $150 billion of TVL into this nascent industry, is primarily through the usage of tokens. Now, if we can actually link tokens to real value and figure out how to distribute that to people, and have tokens, be used fundamentally in protocols to dictate where money's flowing like a real bank would, then all of a sudden we have something that is legitimately, it's not being compared to fintechs. It's actually an entire bank replacement. And you have users that are earning much more than they would on Robinhood or Revolut.
So tell us a bit more about what it means to be community owned, right? Like, I take it there's the token here, and you guys have, tokenomics and incentive models to direct flows, like you're saying. Give us just a deeper sense of this. Tell us a little bit more about how the token works, what is its role in the system, and how you use it to provide just maximum capital efficiency.
Yeah. So ultimately it's ownership in a bank. So staking up into the Super Vault SUP gives you the ability to validate all of these vault products on the platform. So these vault products are entirely decentralized, non-custodial. The way that we can make them like that is because the submitter of all those prices must be staking their ownership in the bank. UP is also used for our upcoming product after this, which is super assets, which is effectively routing liquidity. You can kind of think of it as a smart beta, like an index of products. And to wait to vote in the weight of the index, you have to acquire these. And there's all kinds of things within governance itself for, how fee capture happens on a protocol level for our smart account infrastructure, and everything from fees taken in our bundler and front end and everything else. And that's something that typically has never been shared directly with people who have known equity, right? It's either reinvested or for multiple reasons never given back to the holders themselves.
And so a lot of the incentives here for deposits into Superform and all the participation in the mechanisms that you guys have, because for so long we had tokens and yield that was driven by emissions, right? And it was unsustainable. But you're saying, there's a real business model here. There's real revenue that's driven, and that is the yield that's being shared with token holders.
Exactly. In Superform's case, but I imagine honestly any neobanking stack would be making money off of three main things. It's swaps. So swaps in both web and our mobile app. They're going to be making money off of vault fees. In Superform's case, it's even more pronounced because we own the entire stack for vaults. And then there's also card fees, interchange fees, that whole flywheel that gets going. And yeah, all that programmatically in the code, buybacks, everything.
And as you guys are kind of targeting more of the legacy banking infrastructure, starting to eat away more and more of their customer base, are you guys thinking about we've seen crypto companies get charters for banks in the past? I think Kraken maybe. Is that something that you guys have on the roadmap?
Would love to. It's a pie in the sky idea right now, but definitely for your average retail user coming to Superform, they're looking at on-ramping fees right now, and they can Apple Pay into the app, but it's actually 2.5% crazy. Okay. Even using Coinbase on-ramp or something is 50 bips. At some point, those fees got to compress, and who does that first? We'll see.
Yeah. I tend to think that this is where we're headed. I think right now the one thing that neobanks are lacking, and it's not for good cause. I mean, it's a regulatory challenge and hurdle in order to kind of provide banking infrastructure. Is credit creation, right? The ability to loan out, originate loans, create credit is ultimately what adds money to the money supply, and banks are able to do that. I've heard some things. I think we had Omar from ZK Sync. He was on here last week and he was telling us about tokenized deposits and how once banks tokenize, chartered bank tokenizes their deposits, they are able to lend out, do some under collateralized lending. And then ultimately we could end up with something like that on chain, which, is going to be a challenge given all of the stable coin craziness that's happening right now too. I want to get your take on, we've got the DC cabal deciding on whether or not we're going to be able to pay yield on stable coins. The banks are saying, hey, that's going to trigger capital flight out of the banks into these stable coins. Don't do that, right? That would have massive deflationary pressure because stable coins are fully backed 1-to-1. So, where do you stand on this? How do you parse through what we should be doing here? Obviously, we want the growth of stable coins, but no, deflationary is a tough thing to crack. So, I'm just curious to get your perspective on, as someone that's running a neobank, and stable coins are very centric to, the entire business.
It's ironic because the banks are digging their own grave. If they are not allowing new stablecoin issuers to earn yield, and people like Coinbase, the custodians, are not allowed to earn yield, then everything has to flow to DeFi, and DeFi is the black hole for all their dollars. So now it's up to them if they would like to, do some things like you were mentioning and maybe tokenize some of their own deposits and actually adopt stablecoins. I think there are some banks that are thinking very far ahead actually on that side. But the people that are currently opposing a lot of this stablecoin legislation, I think they're missing the forest for the trees, right? They need to be adopting this technology because that is the best thing they can do for the US dollar at this point.
Yeah. Give us a sense of the Superform roadmap. Bank charters a little bit ways down the way, but tell us a little bit more about what you guys have coming up this quarter and this year.
Yeah, we got mobile, iOS coming out on Tuesday, so I think that's like February 3rd. And then we announced our token actually today, this morning.
Let's go.
Yeah.
Okay, so all of this community owned, like this is finally live. Well, it's announced. When does it go live?
It's very real. It goes live on February 10th.
Okay.
Yeah.
Okay, it's exciting times out here for Superform.
Yeah, huge.
Yes. And so, tell us about the listing process. Like, how are you guys going on that? And, generally you guys, what is it like? I mean, you're in the trenches. The next 10 days are going to be hectic to say the least, Vikram. We appreciate you taking the time coming out here and spending some time with us, telling us about Superform. Like, launching a token in this day and age, you see what's happening in the market. Like, give us a clue as far as how you navigate the current structure and conditions out there.
Yeah, man.
Why now, right? I guess
Yeah.
That's the question, is why launch a token right now?
Because our token does something very important in the protocol, and
Yep.
and we need it. And I think that's maybe what's been missing in a lot of these token launches, is that the token is not immediately needed in the protocol, and it's just something that exists. And we go through phases like this, right? But I think for DeFi protocols, especially, tokens are a very important part of how they can grow. And I mentioned everything the token is being used for here. Ownership, we need them for scaling our SuperVault products and creating this whole validator network behind it. But the token, the process that goes into launching a token, I think we've been working on this for the last year. Actually, I think everything, like our foundation, was set up exactly like a year ago, and it took us all that time to get everything in place. So it's not for the faint of heart, and there's honestly like a lot of things through the process to mention, but I think we're excited that we're almost there. 10 days out,
Very cool.
Yeah.
And when did you guys start Superform? When did you guys get your first user?
So we started Superform beginning of 2022. Our first app went live at the beginning of 2023. So we're building all of 2022. So we've been live in some way for 3 years now.
Yeah. And how did you guys get 150,000 users to the app up to today, right? Pre-token with just the protocol.
Yeah. Well, I'd say like our V1 growth was very DeFi native, just like working directly with protocols. We started doing more, say like Web 2.5 marketing with our V2, which launched, last year. But it's been mostly focused on converting, people that they want to be on chain, but they don't necessarily have the tools, or they don't feel secure, and it's just a little bit too tough of UX for them. And they're able to find some of the tools that Superform has made for them easier. But yeah, I mean, it's just like a lot of on the ground co-marketing with people and seeing how we can convert those centralized exchange earn platform users to actually be properly on chain.
Yeah, that's been the foray for a lot of these people. It's been, first step is to get into centralized exchange. They've been very crypto curious, but haven't really taken the full leap of faith and wallet, seed phrases, all that. How do you guys manage? Do you expose? Because the realization we had just recently was, hey, like self custody is important, but I also want a forgot password button, right? How do you guys how do you balance this custody situation?
Yeah. The truth of it is that a lot of people don't want responsibility. It's something that, crypto people tout, but, so we have social recovery and everything. We work with some great, MPC, providers for our smart accounts. And, there's multiple signers. You can actually, as a user, upload backups to your iCloud, do all that stuff, passkeys. And yeah, it is ultimately still a self-custodial wallet, but there's enough technology out there through all these, account abstraction kits that it makes it a lot easier for someone to actually provide like a Web 2 experience.
Cool. Yep, makes sense. I think we're heading in this direction. I think there's going to be a Cambrian explosion here of neobanks. Good. I mean, you guys got ahead of the curve. You've got 150,000 users. What's the plan to 1 million? How do we get to 1 million users on Superform?
Now that we have the mobile app going live, it's growth tactics. It's how do we create the same enthusiasm and energy for these crypto native products as people have for the custodial versions of them, right? And it's like the truth is for a lot of those users, they might actually be getting the entire feature set that they want out of that custodial product. So I think it's very much an emotional pull. It's like, you know, you guys need to care about these crypto products because first off, they earn you more. And then second is that we can't take your funds. You're safe with us. And you know, that obviously comes with us getting the brand out there more and focusing on that, but safety, security, and higher returns. And eventually we hope that people come.
Incredible. I think they will. Vikram, appreciate you taking the time to spend with us. You've got a hectic 10 days, couple of weeks ahead of you. Try to get some sleep as best you can. We're rooting for you here.
Thanks, man. Great being here.
Absolutely. We'll see you next time. Thanks, Vikram.
Yeah, thanks.
All right, guys. There we go. There you have it. Neobank, Cambrian explosion happening here on the Rollup. Neo Finance is happening right before our eyes. You know, it'll be pretty interesting to see, right? Like once the I'm not sure. We're gonna get our next guest here potentially coming up. We'll see. It'll be interesting to see once we get the new Fed chair in there and we have you know, suspectedly lower rates, right? We know that they're going to slam rates. They're going to be much, much lower. So what happens to DeFi rates when the Fed lowers its rate? At this point, you know, you can kind of get that rate at the Fed when money is at a lower rate. DeFi becomes, in my opinion, much more attractive because you can borrow money, you can go deploy it. That leverage, that rehypothecation cycle, actually you can do a lot more with it when rates are lower. For instance, you know, some of the things that were maybe preventative, you know, you couldn't have done if rates were higher, like take some of these yield coins, right? You know, these only become feasible once you lower rates, and then you can take some credit, you know, eventually comes from the Fed, maybe get it from banks, but then you go and you loan it out, you know, and you originate some of these loans, whether it's figure HELOC and it's going into, you know, the USD thing, going into AI, you know. So that's what's happening. It's happening right before our eyes. Prepare yourselves for the rotation trade because it's really happening. Gold is just not doing well. Silver's not doing well. So hope you guys are doing all right. If you're in the metals, tokenized metals, you can do all kinds of crazy things with the tokenized metals. But guys, quick, easy, very tight show today. Main thing happening is Fed's chair is going to be Kevin Warsh. We're going to drop rates low. All these DeFi projects are going to be preparing for it. And I have a feeling we're going to see a lot of discovery of people looking for yield when rates are much lower. Where can they find it? They can find it in DeFi, and you can find us right here on the Rollup. We are going to be back next week. Hope you guys have a great weekend. Survive out there, you know, stay off the leverage, and have a good time. Touch some grass. Enjoy yourselves. Peace.